Well, there's the old saying, the rich get richer and the poor get poorer, right? I don't know that, again, it's an adage, like it's the natural order of things, but it's not the natural order of things.
Doesn't have to be.
No, this system specifically, the central banking system seems to be a primary driver of that dynamic.
Correct.
How someone that is poor, someone that doesn't understand any of this, how can we explain to them that they are the victims in this scheme, that the poor, or anyone depending on fixed income for that matter, is disproportionately impacted negatively by central banking and fiat currency?
I think the easiest way to do it is to point out to them how there are two sets of rules. One set of rules for them, one set of rules for the rich and powerful, okay? And the set of rules for them are, you want to borrow money? Great. Go get a credit card and you got to pay 25%. I mean, we used to have usury laws that capped that at 10 or 12, but we don't anymore because those all got abolished, okay? You're rich and you want to borrow money? Yeah, you can borrow it at prime, you know, which has been as low as 0 and now is in the 4 or 5 range, you know? So, and you might say, why does that matter? Well, it matters because if you are able to borrow money and buy an asset that yields more than what you're borrowing, you're getting richer. So that method of making wealth is just taken away from everybody who's not at a certain level, you know, wealth. So that's unfair.
So you can benefit from the money printing when you're at a certain, basically it's like you can borrow the money when you don't need the money and use it to extract more wealth.
Correct.
But when you don't have the money and need to borrow the money, you're just going to get crushed.
Tough darts.
Yeah.
Tough darts
it's for apartheid.
Yeah,
economic apartheid.
It kind of, that's a way of looking at it. Another way of looking at it is to say, when new money comes into the system, you know, the people who borrow it and the people who are in the system and know how to take advantage of it can buy, this is cantillionaire, can buy things before the prices go up.
Yeah.
So when let's just take an example, new money comes into the system, you know, the people who get that new money or have access to that credit or new money first are able to buy goods and services at the old price. And then that extra demand from that new money pushes those prices up, which the working man or woman has to absorb and pay, you know, but they never got any of that new money.
Right.
So they're paying a higher price for that other man getting rich.
Right. Yeah. So I mean, it is an actual shell game, basically, right? Like you've just moved wealth out of one set of hands into another set of hands.
Right.
The mechanism is the price increase, right?
Right.
This person's savings now buys them less goods and services.
Correct.
Whereas this person's savings gets them more goods
more goods and services. Yeah, it's that simple, really. I mean, it's incredibly unfair. And you know, again, that chart that I showed you on the wealth inequality, you can see how it got worse when they took interest rates down to 1% in 2003. Then it got worse again in following 2008. Then it got even worse still in 2020. It's back to the alcoholic.
This is the exponential kind of curve.
This is why nothing stops this train. This is why mathematically we're running towards a crack, you know, a break in the system.
Yes.
And I feel very strongly about that. And again, another reason why I wrote the book was, you know, I was very afraid I wouldn't get the book out in time because I mean, the big print is coming. Okay, in my view, the next one's coming, and so I'm thinking, oh shit, if it comes before I print the book, I'm going to look like an idiot. Well, thankfully, I got the book out before the big prints happen, but it's gonna happen because it has to happen mathematically, Robert. It just has to. The system will collapse if we don't continue to expand the money supply. If we don't continue the inflation, and in fact, continue the inflation getting worse with each event. I mean. A good example, in the 2008 example, as you know, the Fed balance sheet pre-2008 was $900 billion, right? It went up to like 3.4, came back down a little after that. But and that took, you know, a bunch of rounds of QE 1, 2, and 3, which we called QE infinity. It took a bunch of rounds of QE, and, you know, it was over a period of from 2008 to 13, 14, something like that. So it was a bunch of years. Well, 2020, you know, we did more in like a third of the time, right? I mean, 2020 hit it, 2019, 2020, and we went from, you know, a balance sheet had been reduced back down to 2.9 or 3. You know, we went up to a peak of $9 trillion. I mean, we printed $6 trillion worth of money, and they did it in less than 2 years. You know, which caused the M2 supply to go up 40%. I mean, I like another tweet that I've seen very common recently, which is, you know, when they printed 40% of the money supply in 2 years in COVID, imagine you had worked your entire life, all of your savings, every year you diligently put away money and saved, and then they just inflated away 40% of that in 2 years. Gone.
Time theft.
Just gone.
Yeah.
You just spent, you're a working person and you'd save $400,000, say, over the course of, just working away and putting away your savings year after year after year, right? And then suddenly this event comes along and that 400 only has, 250 of purchasing power because 40% of it just got taken away.
Because somebody pressed a button.
Somebody pressed a printing button. It's
crazy, right?
Right? And that's to put it in terms I think people can understand, that's what's going on.
Yeah.
And it's just so wrong. And it's so sad and so unfair.
It is.
And that's why somebody had to say something about it. I mean, somebody had to write a book about this shit, right?
And you've done a great job.
And I did. Yeah. I don't know if this is the book, I think it's as good a book as I will say this is as good a book as I could do. I don't know if this book will do what I want it to do.
Sure.
But I couldn't do a better book than this.
Well, I know. I'm very sure that you've done a great job because I know you're hard working. I know you know this stuff really well. This is another one of those connections. This one's not so obvious.
Okay.
But it is probably the most important one, right? Like I think this was in the Gold Wars. He said that the monetary standard and the moral standard are inexorably linked.
Yes.
Right? There's like a very Ayn Rand has said this too, like money is the barometer of a society's moral virtue.
I think that's right.
There is this deep moral component to money that almost no one has any appreciation of whatsoever.
Totally agree.
If anything, they often misquote the biblical passage and say money is the root of all evil.
Yes.
When it actually says the love of money is the root of all kinds of evil, which is, that makes sense, right?
It's
if you
different.
love money, well then you're
people.
Exactly. You're idolizing something.
The wrong thing.
Right?
Yeah. Money's a tool.
Exactly. Money's a tool, right? It's like loving, I don't know, glass jars or something. Like, doesn't really make sense. So how do you approach the connection between money and morality, and what is it about money printing that has steered us the wrong direction from a moral standpoint?
Yeah. Well, first of all, I direct everyone who's listening to the chapter on sound money. Sound money is a moral issue, page 41. And this has been around a long time. There have been people have often wanted to fool with money, with the monetary standard. And money is just a shared illusion. It's what we all agree is the intermediate good that has value. And this is what the early Austrians said, Menger particularly. And the Bible talked about it, obviously, sound money and honest weights and measures. People were talking about, they were doing transactions, and if you thought if you bought an ounce or whatever the unit of measure was back then, you wanted to get a real ounce, not a half an ounce, not a third of an ounce. And it's a way. I mean, it's a way to cheat. Cheating on the money is a way to cheat. It brought down the Roman Empire. The denarius was originally all silver. It was the soundest currency of the time. It was the largest empire of the time. And over the course of the life of that empire, became the content in the denarius was zero. Silver content was zero. And that you could almost track the decline of Rome with the decline of the sound money. So it's an indicator of people's willing to be honest with each other. And honesty is essential for human cooperation, because if people are dishonest, then trust is lost. And if trust is lost, if I can't trust you to do something, you can't trust me to do something, then things don't get done.
Sure.
And we all, and there's a certain level of honesty that exists in society. I mean, we all trust that airplane pilots are well-trained and understand the responsibility they hold, and they're responsible for hundreds of lives, and they're not going to drink, and they can't screw up, and they're going to do their job honestly, and that's essential. And the minute you start to fool with the money, and maybe even say that fooling with the money is okay, and maybe even say that gambling is okay, you introduce an entire different way of behaving that becomes, well, just how can I get the most that I can get, and devil take the hindmost is kind of the phrase, the idiom from the 1500s that I put in the book. And so it's problematic. I mean, there's a good Tody Denton quote in there. He's a fund manager in Switzerland that says, dishonest money leads to dishonest everything. Yes. Politics, morals, the works. It spreads. And so, if you've got, I think Ron Paul said something, if the government is running a Ponzi scheme, which they are, they basically print more money to pay for the things they can't support, then why doesn't everybody else think they're allowed to run a Ponzi scheme too?
Yes.
And so, if you have a form of dishonesty in the underlying base layer, the most important thing, I would argue money, as you pointed out, it is the most important thing in the economy. It defines everything. And so if you decide you're going to play around with a rubber money standard, how can it work?
Right.
I mean, there's another great quote in the book by Nathan Lewis talking about how if two people are going to coordinate to create a piece of a machine tool that's 500 millimeters long, that's going to do a piece of work, and suddenly the definition of a millimeter is varying by 5% a year or 2% a year, the guy making the piece of the part is going to mismeasure it. He's going to give it to the guy who wants to use the part. The guy who wants to use it is not going to be able to use it because it doesn't fit.
Yes.
And all of the benefit associated with having truth, is lost. And this is, by the way, this segues nicely into the beauty of Bitcoin because it's a mathematical proof machine.
Yeah.
It's mathematical truth. And it's just like, when I first grokked that, it was like my mind was blown. Do you know what I mean? Like, holy shit. We've suffered thousands of years of human beings living with money that was varying degrees of unsound. Admittedly, gold was pretty sound, but it diluted 1.7% a year, and over 50 some odd years, the supply would double. So there was deflection even in gold. But now we have a form of money with zero dilution, zero. Deflection. A little bit now as we're at 9.7 or 8 going to 21. But quite small, and at 21.40, it will be zero. So,
it is effectively zero because you already know it, right?
That's true.
It's the unknown component.
Actually,
right?
That's true.
Yeah, it's like
even though we've got some more supply to come, it's on a very set schedule. Right.
Like when you look at a cap table and you look at it on a fully diluted basis.
Yes.
These are all the possible shares that will ever be issued. This is all the dilution you will ever incur.
We've got that.
We have that.
We have that. Right. Yeah. So to me, that's it's so different and so unique and so powerful. That the monetary lie is about to disappear.
Yes.
And it's so hopeful and so, it's friggin' fabulous, right?
Yeah.
All the bad shit we were talking about before, it's all going to go away.
Yes.
It's really, that's the positive part of this whole thing. I see people hurting from the system as it is, and that's a real bummer. It's a real bummer, but and the first half of the book takes you through. I've had some people DM me about the book who've read it, and they said, good God, I had no idea. I've got some really great case stories of bad fiat behavior, you know? And they're like, oh my God, this shit is even more broken than I thought. As we're now watching Doge, unearth some of the crazy shit that the government's spending money on, right?
Of course.
It's no surprise. Fiat leads to a lot of really stupid shit.
Yes.
But, guess what? When we go to non-fiat, sound money, I think people are going to be blown away with how much better it all gets.
Yeah.
It's really going to be something. And at least that's my hope, and I believe it.
Yeah, I agree completely. And this point of standards is so important, right?
Yes.
Like we're doing it with language, right?
Yes.
We try to standardize around how you understand a word and how I understand a word, and that's how we have dialogue.
Right.
This idea of the metric system, or like as you said, those things standard, like it doesn't change. It needs to be immutable so that you can collaborate and coordinate with people across in different places and at different times, right?
Sure.
Like when I order the 500 millimeter piece in 2007, it better be the same 500 millimeter piece in 2012, right?
Right.
If it's fluctuated, then my components are not going to work together.
Exactly.
So all economic coordination collapses. And the same is true with the money, right? We need standardization so that we can have clarity of communication.
Correct.
And somehow, and it is, you've done a good job explaining it, but we use the term moral standards, right?
Right.
Somehow that is related to these like mathematical measurement standards as well.
I think it is because I think the minute it gets fishy, or fluctuates, we know man has fallen, mankind has fallen. Yeah. The minute it fluctuates, people are going to try and figure out how to make it fluctuate in their own benefit.
Of course.
It's just as natural as can be.
Start gaming the system, basically.
Of course they will. Yeah, of course they will. And then, and this has been a very sophisticated game that the wealthy have played on us. Do you know what I mean? And the insiders, I should say, have played on us, because not all the wealthy are bad. But those who support and benefit from this system, in my opinion, they are not behaving ethically.
Yeah, it's difficult to circumscribe a group. Right, I would often say the shareholders of central banks, but to your earlier point, even people that are borrowing money at below market rates and using that to acquire assets, like they're sort of
and by the way, I mean, and I even made this point in the book. I said, look, not every fiat lord is a evil person intrinsically.
Sure.
Some are they're just playing the game in a way that
they're
they
following
think,
their incentives.
Yeah, exactly. That they think it should be played. Now, some of them, I mean, I think are legitimately evil. I mean, I think a guy like Bernanke, who says he wasn't printing money, who lies about the interpretation of the Great Depression, who's probably getting a huge salary now from Citadel, for supporting them, during the many years when he helped them to become rich. I mean, I think there's a guy who is legitimately evil. Yeah. But and there are others as well. But I would say, some of the other people, they're just playing the game.
Sure.
And they're playing it in a way so that they can win. I think once they read this book, they might think, gee, he has a point. Maybe the game is a little crooked, and maybe we should make the game fairer. And that's all I really want. And I think it's so deep inside mankind and human beings. And if you look at all of the religious texts and traditions and everything else, human beings want fairness. We just want fairness. Sure. I mean, the average person, I don't think anybody, I mean, some don't. Some want to cheat. Some want to get ahead no matter what.
Right.
But I think the average human being, you just want fairness.
Yeah.
You just give me a level playing field. Give me some fair referees. I'll play the game. That's all good. I mean, and part of it, I think that's why the book might resonate. I mean, I point out how, the game's not fair.
Yeah.
It's just not fair. And no wonder why people are pissed.
Yes. Yes.
Right.
Yeah, and you see that, I mean, with any game that humans play, right? If you can just arbitrarily change the rules if we're playing poker and I get to decide what the hand rankings are every hand, it's like, well, I'm going to win every fucking hand.
Exactly.
And you're never going to want to play, right? So there's no game. If the rules aren't immutable and stable, then there is no game. It becomes like a political struggle.
Not a fair game. Right.
Yeah. Well, I mean, it's not even... Yeah, it's not fair, and therefore it becomes not a game because the other player doesn't want to play an unfair game, right?
Right, exactly. Well, once you realize you're the sucker at the table, you just say, "I'm going to get up and leave."
Exactly, exactly. Right. And then, further is like, okay, if it's unfair, that's one thing. But then if it's unfair and then subject to further fluctuation, it's like, well, then we can never develop a stable strategy or do any planning at all because we don't know what the rules are going to be.
Right.
And that's essentially the monetary system we're living in today.
Correct.
It's like you just basically don't know what the rules will ever be.
Correct.
So everyone's on the take. Everyone's playing political games.
Yep.
Rather than just playing economic games.
Right. And the economic game should be, how do we allocate this capital effectively to make lives better for everybody?
Solve problems.
Solve problems.
Yeah, exactly.
If the money is appropriately priced, people will make the right decisions.
Yes.
And I think it would be stunning how much better we would all live. I think it would be stunning. I really do.
Yeah.
There wouldn't be the waste of resources in the things that we waste resources in now. I mean, just a perfect example. Let's take the lottery, for example. Okay, the lottery makes absolutely no sense. We all know it's a game where you can't. I mean, somebody's going to win it, right? Mm-hmm. But statistically, no poor person should ever dump any dollars into the lottery. Full stop. Right?
Yeah.
But they do because they feel so helpless in the existing system. And it's like the only, it gives them some sense of hope.
Yeah.
Do you know what I mean?
Yes, 100%.
They know the thing is rigged. They know they can't get ahead. Yeah. And they say, to hell with it. Screw it. Yeah. Screw it. Yeah, I'm going to throw this Hail Mary. Yeah. I'm buying that $2 ticket and maybe my life will get better.
Yeah. And the sick, twisted part is the winner in the lottery is always the state. Because they're always taking 50% of that.
Well, there's that
pool, right?
Yeah, and the other winner is that a lot of the people who end up ultimately winning it end up ruining their lives because they don't know how to handle it, and then it's like it's a blessing and a curse, right?
Yeah.
I mean, frankly, I think they should just be outlawed, but that's just me. I'm kind of a Puritan on that sort of stuff. But
yeah, I mean, I don't think it at least should be. It's a regressive tax, basically, right?
Very much so. Poor. Yeah, very much so. I mean, I think gambling. People want to gamble, let them. But I don't. To me, that's not a productive use of people's time or effort. Do you know what I mean? It's just not.
Yeah, I completely agree. And the fact that it's state sponsored just makes it more problematic. There's just more moral hazard there.
Yeah.
And this is one of the most interesting areas of money for me. It's like there is this. All human interaction is game-like, in that we're moving towards objectives,
right?
And we're operating within the boundaries of some rules, right?
Right.
Even if that's just the laws of physics,
Right.
and we're trying to, whatever, move from point A to point B. There's
Run
still
fast, or
there's
right.
still like this game-like design. So when you start to look at it like that, it's like, okay, well, all human interaction is game-like. This level playing field idea is like extremely important. It's like the most important thing there is.
Yeah.
Because if you have this uneven playing field, this fluctuating playing field, then it's just chaos, right?
Right.
People are just really trying to fight to get into the position of power to make or change the rules.
Right.
Because if I can make or change the rules, then I can win every hand.
Right.
Right. So, but if I eliminate that possibility, then my only alternative is to play the game to
Correct.
try and get ahead. Fairly.
Yes.
According to the same rules as everyone else. So,
Yes.
So getting rid of this rules for thee and not for me dynamic is like
Right.
one of the core value propositions of Bitcoin.
Correct.
Yeah.
Nobody has an advantage.
Yes,
We're all,
exactly.
I mean, I was interacting with somebody on Twitter yesterday, and they said, "Well, this is really unfair because all the people, early hodlers, are going to be incredibly rich." And I said, "Hang on a second. It's an open market. It's a fair system. It's based on math. You had the opportunity to buy when they did.
Yeah.
Don't begrudge them the fact that they bought it and you didn't. Yeah. You have the opportunity to buy it now or not. Figure out what you want to do and do it or not do it."
And they took greater risk.
Yeah, they took much greater risk.
Greater reward.
And they're going to get greater reward. I mean, the other thing on that, we could touch on it because I think people might be interested in it. And I tried to touch on this in the book, but this thought came to me after I wrote the book that a lot of people now look at Bitcoin at 100,000. They say, "Well, it's too expensive." I mean, I have a lot of friends. I have a lot of wealthy friends who feel this way.
Unit bias.
Yeah, you bought it at 10. You bought it at 5. I can't pay that much. And I said, okay, let's frame this in a slightly different way. The monetary system is the Titanic. Okay, and I'm taking this from a guy who DM'd me this on Twitter, so this is not my original idea, and I can't remember his name. He didn't want to be doxxed, so he wouldn't give me his name. But anyway, the monetary system is the Titanic, right? Okay, yeah. So I bought some seats for $5,000 and $10,000 and $400. I mean, I bought all my earlier seats, right? Okay, fine, and I'm done buying. Okay, it's $100,000 to you. Do you want a seat? Your choice. You say, "No, I don't want a seat," or you can buy one. And it's just, the seats have gotten more expensive, no doubt. But if it is the Titanic, I think you want a seat on the lifeboat,
Oh, yeah, buying seats on the lifeboat. Got it. Yeah. Yeah, exactly. Yeah, well, again, there's this illusion that people think, it's part of American exceptionalism, I guess. They just think the dollar is and always will be.
Yeah.
And I'm like, guys, open a fucking monetary history book. Show me one example where that's ever happened.
Yeah, no, it doesn't.
It's never happened.
Yeah.
They all die. It's either hyperinflation or you get conquered.
Yeah, over what? And the issue is just over what period of time and when. And I mean, and a lot of us have had that wrong. I mean, in the book I talk about how I had it very wrong in 2008.
Sure.
And I may have it wrong now. I mean, this could take 5
But
years.
directionally, you're correct.
I think so.
There's almost no question.
Oh, well, yeah. Look at
the U.S. is a fiat currency. So long as it's a fiat currency, it will go the way of fiat currencies at some point.
Right. And it has lost a lot of value. I mean, gold has lost, the dollar's lost 98.5% of its value.
Thanks for watching. If you enjoyed this episode, click here to find more just like it, and here to find our most recent episode. Also, make sure to like this video to help shine light on the corruption of money, and be sure to subscribe to this channel to stay connected.